All right, what's going on, fellow traders? So today I'm going to talk about what I use for screening stocks. When I look for stocks, I'm looking for a catalyst, right? Something that'll make it interesting, something that'll make me want to look at it further, and maybe there's a potential trade there. So I use stockcharts.com, pretty interesting tool. And I'm going to go through some of the screens that I use. So the first, so when I come in the morning, I'll run the screen. This is from the previous close. And then around 3:30 or so, I'll run another screen to see what's on deck for the next day. But this is as of last night's close. So if I go alpha rate or bullish momentum, so this is the criteria that I use. So in the end, I want to see stocks that trade at least 1 million shares per day in volume. I want to see stocks that that are above $20. So I tend to stay away from stocks below 20. Just it gets kind of funky down there. It's my own preference, but you can do whatever you want, of course. Now, all of this stuff that you see here, the daily range stuff, what I'm looking for is if today's range or the previous close range from high to low is greater than the previous 10 days, I know there's something going on. There's a catalyst. Something interesting is going on. On top of that, it's got to be an up day, so it's going to be a big white bar if you're looking at candlesticks. And I also want to see that the close of the day was higher than the past 5 days. So I'm looking for something that maybe is breaking out, something that's getting interesting. So if I run the scan, you will see a bunch of names here. So if I click on this, let's go to the watch list with SP. Okay. All right, so you can see here yesterday was a big white bar. It was wider than the previous 10 days, and it's also higher than the previous 5 days. So this is interesting to me, this breakout here. It was done on good volume, so I might look at it closer. Anyway, let's move on to the next one. So if I go to let's go to this. So alpha rate or bearish momentum. So this is basically the opposite of what I just said. So again, we're looking for 1 million shares traded. We're looking for something greater than 20. This is going to be the high to the low, the range on a down day, and it's got to be that range has to be bigger than the previous 10 days. It has to close down on the day, and I want to see it make a new low over the past 5 days. So again, if I run the scan, I don't think we'll get quite a few, I guess, here. So I don't know. So the Key Corp was interesting. So if I go my watch list, so there's Key Corp, right? So Key Corp had a really big down day yesterday. It followed through today. This is on my watch list. I'll go through this on another blog site, but this is an example of what I'm looking for. I'm looking for a breakdown. So this will give me a downside bias, and it make me try to profit from the stock going down. All right, let's try another one. So I like to look at gaps. So this is the gap up. So basically, this is U.S. companies that have a moving average volume of greater than 1 million shares, and the stock has been above $20 for the past 60 days, typical moving average, and it's gapped up. Could be a very interesting play. I also have it for the gap down. Again, another interesting play if I have a downside bias if I want to trade something. So we'll kind of look at that in further blogs going forward, but I'm just showing you the screens right now. I have alpha rate or strong volume gainers. So again, greater than 1 million shares, it's got to be above 20, and it's got to be up on very big volume. And I also have the volume decline here. It's just the opposite, just a big down day, big volume, maybe something interesting going on there. So these are the screens that I run. Every morning I come in, I run these screens, I get together a list of companies, I'll go in, I'll look at the charts, and see if maybe there's something interesting there, a breakout that we could trade. So when I find a company that looks interesting, what am I looking for? So I just put together something really quick here, and basically when I'm looking at technicals, and what I'm doing now with these screens is just purely technical, I'm looking for certain patterns. So I did these kind of stupid looking, but I did them just to see what I'm looking for. So the first one is an ascending triangle. So when you see a stock, it's going like this. It's made a low, it's made a high, it's made a higher low, the high there, it's a higher low. So it's kind of coiling up here. And then upon this breakout, that's what I like to see. Now, a lot of traders will just trade the breakout. Me, I prefer to see if the breakout is going to hold or if it's going to be false and it's going to pull back again. So what I do is I will mark it as on a potential watch list right here when it breaks out, and then it's going to come up, and then I start watching the MACD histogram. And in more blog sites, I'll go over this, and you'll see it in live action. But this is supposed to represent the MACD histogram here. So the stock is going to come up, it's going to come down again, and then eventually it's going to start to head higher. Now, if the MACD histogram starts curling higher, showing that momentum is coming back into the company, and it held its support, which was previously resistance, I'd be inclined to trade it with an upside bias. So this is one pattern that I'm looking for. The second pattern I'm looking at is a channel breakout. So if you're looking at a stock and it's up, it's down, it's up, down, it's making this pattern of channel, and all of a sudden it breaks out, preferably on good volume. So again, a lot of traders will trade the breakout. I prefer to wait for confirmation. So when the stock breaks out, and it may go up, then it's going to come back down. So if the MACD histogram is starting to curl higher, meaning that the momentum, the buying momentum is starting to pick up again, and it's still above its support, I'd be inclined to trade this to the upside. So this is the inverse head and shoulders, another pattern I watch for. A lot of times I'll pick this up on the scans that I do. So inverse head and shoulders is just that. So here's a shoulder, here's a head, here's a shoulder, right? So stock goes down, makes the shoulder, comes back up, retest this neckline, comes back down, forms the head, comes back up, retest the neckline, comes back, forms a second shoulder, and all of a sudden breaks out. Now technically, when on this breakout, technicals dictate that whatever the price is from the neckline to the bottom of the head here should be the upside potential if you want to trade it that way. I don't. What I actually do, again, I always, in all my trading, I wait for confirmation. So usually there's going to be some kind of run, and it's going to come back, and when I see the MACD histogram start to recover and positive momentum come back into the stock, and it's still above its prior resistance, new support, I'll take a chance and I'll go ahead and I'll make an upward bias trade based on this pattern. So this is cup and handle. So stock comes down, kind of meandering, comes back up, hits the lid up here, comes back down again, comes back up again, and it breaks out. This is your typical cup and handle. So this thing is going to break out. Again, you could trade it on the breakout. Me, I prefer to see where it goes after this. It could be a false breakout. A lot of times this pattern tends to come back in and it's a false pattern. But if it holds true and it goes back up and it comes in, and if it can show support at the previous resistance with the MACD histogram showing some gains here, I would trade this with an upside bias. This is the descending triangle. So everything I said on the bullish side, this is just kind of like flipped over. So if I'm looking for a downside bias trade, if I see a stock that's higher, making lower highs and just finding this base, and it breaks the base and it heads down, it could come back up. This is a lot of behavioral financing. So all these people that were buying in here are going to be looking to get out, break even. So in the end, it's going to hit some resistance here, and then if we can show this MACD histogram losing momentum right below this new resistance, I'd be inclined to take a downward bias on this. The channel breakdown, again, this is, I hate to kind of keep going over what I just said, but so it's in a channel, it's up and down on a channel, and then it breaks down the channel, it comes back up. If it's going to test this previous support, which is now new resistance, and the MACD histogram is losing steam, I'd be inclined to take a downward bias on this type of name. And this is the head and shoulders. What I showed you before was the inverse head and shoulders. I hope I said that. But the head and shoulders, so you got the shoulder, you got the head, you got the shoulder. Here's the neckline. It breaks down. Technically, if it does break down, it's supposed to meet this gap here between the neckline and the top of the head. So, I mean, you can expect the stock to come down here. Me, again, I prefer to see it come down, see it come up, test this previous support as new resistance, and if I see the MACD histogram breaking down, I'll be inclined to take a position that's going to offer a negative bias. All right, that's it. That's all I got. So, so that's how I screen for stocks. I do it every morning. I do it every afternoon. I look for these type of patterns. Let me get this off. And as we press forward, I'm going to go ahead and start showing you the screens. I'm going to start showing, what trades I'm doing, what my expectations are, and we'll see how it goes from there. I guess this video is long enough. Thank you, guys.